me right exclusively is the former chairman and CEO of Morgan Stanley, John Mack. John, great to see you.
Good to see you, Maria.
Thank you so much for joining us.
Thank you.
Every time I think of you, I think of when we did that one interview when I came to the floor of Morgan Stanley when you had just come back and the entire trading desk just clapped. They were so happy to see you come back.
Well, it was a great day for me, and hopefully Morgan Stanley felt the same way. But every time I think of you, let me tell you what I think about.
Oh, God.
It was after 9/11.
Right. Oh.
I was running Credit Suisse.
Right.
And you interviewed me, and I broke down.
You cried.
Yeah.
Well, we were all crying after 9/11, but you had a lot of friends and colleagues and workers who perished, and it was a horrible day for all of us. Unfortunately, you and I did share that day together.
Yeah, it was really tough. Well,
incredible. And look at where we've come. Terrorism, once again, the #1 issue on everybody's minds. What are your thoughts in terms of what's happening in the world today? You see the agenda coming out of the Trump administration and North Korea now on the docket, Syria, China, Russia. How do you see all of these?
Well, I see them as issues that have been bubbling for a while, and I think with our new president and his leadership, we're being much more aggressive addressing these, whether it's putting more support behind our allies or taking action like he did in Syria. I think this issue in Korea is a huge issue, and I'm glad to see these reach out to President Xi and working with him on it. Hopefully things calm down. Hopefully the Chinese can put pressure on North Korea to slow down, back off. But I think at some point, as much as we like to be not as directly involved, at some point we have to get very involved. And I think this administration is doing that, and we're going to have a lot of wins and we have some losses. But we cannot be passive. The world's changing. Terrorism is global now. And I think to let things go and just try to go down the middle of the road is very difficult to do. And I think President Trump is not going down the middle of the road. He's taken action. I'm very supportive of that.
So you're supportive of what you've seen so far on that front. In terms of China, you've spent a lot of time in China. Let me ask you about that and whether or not we could come to some kind of an agreement with the other superpower, China, along with the U.S., to actually get things done. I mean, now the president is trying to do this little negotiating deal, whereas telling the Chinese president, look, if you help us on North Korea, we'll be good on, maybe we'll get a better situation on trade. What should a trade deal look like, given your experience in China?
Well, I think clearly the Chinese want open-door policy on trade with the U.S. We're a huge market for them. It's very important. I don't know about the specifics of a trade deal, but I don't think if we're trying to build a relationship with the government today in China, which we are, I think we have to be very flexible on trade. I do not think we can throw high tariffs on their products coming into the country, and I think that would hurt all of us. Look, at the end of the day, Chinese products deliver something to our country that we use and need at a very low price. We should take advantage of it and make sure, and make sure it's a fair transaction where we do get their support in other areas.
So how should we be dealing with, for example, the Chinese saying, look, you're a financial services company, John Mack. Yeah, you could come and sell to our 1.2 billion people, but you're not going to get an ownership. You can do a joint venture. You can do 49%. You're not going to ever own it out and out. How do we deal with that?
Well, I think that's changed. If you go back 6 or 7 years ago, Morgan Stanley was able to buy a piece of an A-share company, a brokerage company located in Shanghai, but all over China. And, you know, it had a lot of the same governance rules that we have here. We've learned a lot. We have taught them a lot. I think the kind of the transfer of technology and knowledge of the markets and also the regulatory environment and compliance. So the Chinese have opened the door. We may not own it outright, but I think over time, Morgan Stanley most likely will be the majority shareholder. Maybe not, but it doesn't make any difference. What we want is to have a level playing field in that country, and I think over time that's happening. And given, again, what happened with Washington Securities, it is happening.
Yeah, that's really interesting, the way you see it. You've really seen the change over the years.
Well, I have.
And you've been in critical spots running major investment banks. So in terms of the consumer and the investor in China, what do you see in terms of flows? Do you think there's more appetite to actually buy stocks? Is there an appetite to send money across the world to invest in U.S. stocks, for example?
Well, I think at least at the working level and at the maybe junior executive level, most of that money stays in China, and they invest through the local securities companies. I think the Chinese, and this is a broad statement, I'm sure someone will say, John, you don't know what you're talking about. They like owning things. They want to take risk, and they do take risks. What has to be very direct and very focused is the regulatory environment. Make sure that everything's above board. The same thing we do in this country. They're just beginning to do that. You can't have rumors. You can't put out false information. It's got to be honest, straightforward information. So the Chinese investor, I think, is very heavily involved in trying to own a piece of equity in that country.